Welcome to DWS Market Update. It has never been a secret that President Trump intends to raise tariffs on US imports significantly. Nevertheless, the extent of the tariffs announced on Liberation Day in early April took markets by surprise. Even if we assume that some tariffs on individual countries will be rolled back in negotiations, the overall burden on global trade remains higher than what we had anticipated. Hence, we had to adjust our forecasts. Let's start with the US. Tariffs are driving inflation up. American consumers seem to sense that larger price increases are on the way. At least, that is what consumer confidence surveys suggest when they also ask about private households' inflation expectations. Consumers are therefore likely to become somewhat more cautious in their spending. The corporate sector, in turn, is feeling the impact of trade uncertainty. That is what we are hearing in most conference calls when companies are currently reporting their first quarter results. All in all, the outlook points to lower growth ahead combined with higher inflation. Given these inflation risks, we do not expect the US Fed to rush to the rescue with quick interest rate cuts. In the case of Europe, growth forecasts need to be revised down as well. However, the European economy should find support from fiscal policy, as there are clear signs that governments, particularly in the case of Germany, will significantly increase their spending, especially in the areas of defense and infrastructure. Furthermore, private households in the Eurozone have increased their savings rate in recent years, in contrast to US households. This puts European consumers in a better position to absorb the economic weakness caused by the tariffs. In this regard, we find it encouraging that recent business confidence surveys have confirmed that sentiment in the European corporate sector has not deteriorated, despite the massive tariff increases. Hence, while the growth forecasts for Europe need to be revised downward, the cuts are lower compared to the US. The appreciation of the euro, in turn, is dampening inflationary momentum, which gives the ECB some leeway to lower interest rates a little further. That's it for today. Thanks for watching and goodbye.